Hey guys, welcome back to the channel. I have one question. I'm curious about who is your role model? To me, Charlie Munger definitely ranks one of mine. And please let me know in the comment section below who is yours and why. I would love to hear from you. There's a Redalio that I introduced last time with a link I'll put just right here. Charlie Munger does not have systematic publications himself. Therefore, the closest is the books about him, but put together by other people. I still highly recommend them, as Charlie Munger is just timeless and super worthwhile to read. The first is Poor Charlie's Almanac by Peter Kaufman, which explores the life of Charlie Munger and summarizes his inspirational takeaways in life. Interestingly, this title follows a book of Charlie Munger's role model Benjamin Franklin called Poor Richard's Almanac. Poor Richard, Poor Charlie, I'm pretty sure it's overly humble. The second one is Damn Right by Janet Lowe. This one is Munger's autobiography. The third one is Charlie Munger, the Complete Investor by Trent Griffin, which presents the essential steps of Munger's investing strategy and life wisdom. I'll put links to the books I mentioned down below and you can check out if you're interested. In today's episode, I react to some of the general and important topics that Charlie Munger has answered in the past 2 years in respect of the economy, the debt, the world, especially China, how to invest generally, crypto, advice on fulfillment, and how to live a happy life, so on and so forth. His ideas are rather fundamental, timeless, and evergreen to me. I have selected the best footage of his public answering in the Daily Journal annual shareholder meetings in 2022 and 2023. I think the content in 2022 is better than that of 2023 in terms of the qualities of the questions, the importance of the topics, and the relevance to the fundamentals. So we will start with the content in 2022 and go further into 2023. There is a ton of wisdom to digest there, and I believe it will benefit you in the long run too. Really quick before we continue, I would like to say a huge thank you to every one of you who hit the like button and subscribe. It helps out tremendously, and thank you for doing that. Okay, without further ado, let's dive into Charlie's speech.
January, Jeff Gundlach was quoted, "China is uninvestable, in my opinion, at this point. I've never invested China long or short."
I feel like this is very common from the US perspective, and a lot of people hold opinions like that, and a lot of people actually invest in China as well. Like some of the best and most successful investors in China are US background, are US companies, surprisingly. Let's see what's his questions.
Is that? I don't trust the data. I don't trust the relationship between the United States and China anymore. I think that investments in China could be confiscated. I think there's a risk of that. End quote.
Confiscated. I think definitely he is do not really understand China. Of course that there is not good things happen in China, and it's not perfect system, but it's still far from being confiscated. If you don't have experience, enough experience doing business in China, it's just very, very hard to explain. It's actually not as big as a risk as you think of it. Sometimes the rule of law is kind of interfered or influenced by other forces, but any stocks or any company being confiscated still are far away from that, I would say.
Obviously, with a significant percentage of the Daily Journal's marketable securities invested in BYD and Alibaba, you feel differently. Please explain why you are right.
Well, of course, only the future knows who's going to be right.
This is very typical Charlie Munger response. I think it's very wise to say that. I don't know whether I'm right or not, but only the future knows. I mean, he is very wise. He knows what he knows, and he knows what he doesn't know.
But China is a big modern nation, got this huge population and this huge modernity that's come in the last 30 years. And we invested some money in China because we could get more value in terms of the strength of the enterprise and the price of the security than we could get in the United States.
This is actually very important. I don't know if you get the point here. They are Charlie Munger and Warren Buffett are a different level of investor. What deals they can get in China is very different from what common people can get. So they are getting the top deals in China, I would say, and you will be surprised how top deals in China can have return huge. So that's a very key difference. If you are a US investor, you have to consider that they're the kind of different players than common people, and you have to take that into consideration.
Other people, including Sequoia, the leading venture capital firm in the United States, have made the same decision we have.
Exactly. Sequoia, I would say is super successful in China. I used to work on the deals on Sequoia, other top VC also, but I would say Sequoia is not only a VC but also PE. But I would say the deals that Sequoia are getting and their returns on their investment is super successful in China. I think they are number one in China in terms of returns. It's incredible. Sequoia wins and Munger wins. Warren Buffett wins in China. It's incredible. Check out the numbers if you're interested.
I'm sympathetic to Gunliker. If he's nervous, he doesn't have to join us. Different folks have different opinions.
This is exactly the point that I was mentioning. Everyone is different level player. It all depends on what type of deal you can get in China. It amounts to a different return. For the type of deal that Warren Buffett and Charlie Munger can get in China, I believe it's like huge return. Everyone is different and depends on your strategy and resources and the investment firms relationships they built in China and everything. So it really depends on what deals you can get in China. It's not about like China is not investable. It's totally not. Like it's very ignorant to say that. And if you check out how much China has grown and like how much return you can get in China as an investment firm, I think if you see the data, you will change your opinion.
I feel about Russia the way he feels about China. I don't invest in Russia, so I can't criticize Gunlock's point of view. It's just I reach a different conclusion.
I have no particular opinion on Russia. I definitely don't trust it either, but like I have no particular view on Russia.
This question comes in from Bill Roberts, and he says, Charlie, you and Warren have been making concentrated investments since the 1950s. Many of these investments have led to gains, but even more impressively, none of them have led to significant losses. As far as I can tell, neither one of you has lost more than a few percentage points of equity on any single investment. Daily Journal has recently bet a large amount of its capital on Alibaba and foreign traded stock. It's also taken on an additional $40 million in margin debt to make these investments. What makes you so sure that these investments won't lead to a substantial impairment of Daily Journal's equity capital, which would impact the company's ability to reinvest the resources needed to develop the company's software operating business?
Well, of course, if you invest in marketable securities, you have the risk that they'll go down and you'll lose money instead of make it.
It's like very clear to point it out first. They also see the risk. I mean, like no investment or nothing is like only have upside but don't have the downside. So it's a possibility, definitely. Any absolute question like that is kind of inaccurate because the answers won't be absolute.
But if you hold a depreciating currency, that's losing purchasing power. On balance, we prefer the risks we have to those we're avoiding, and we don't mind a tiny little bit of margin debt.
There is a saying that if you believe, it's not belief, but factually, if this deal is the best deal in the century or in the human history, I don't understand why sensible investor won't borrow money to bet on that. I mean, if that's like top one out of all the investment. But the percentage of that is like super slim. It's like maybe a century you come across one. When the big opportunities, you go big. When small opportunities go small.
I got lots and lots of questions on Alibaba. That was the one question that I received more than any other. So I'll dig a little deeper through some of these.
Interesting. It's interesting to me to hear that people at least they're carrying looking at Alibaba. Actually, I'm from Hangzhou, which is the city where Alibaba is based. So basically, that I grew up with Alibaba.
Someone named Vishal Patel from Toronto wrote in and said that as a Daily Journal owner, do we own local shares of Alibaba? Does that actually give us legal ownership of that business, or do we have a variable interest, and is that the same? Net, what do we own? And I did get a series of questions related to that same sort of thought.
Wow, this is amazing to me. This is a very technical question and very good question and very key question. I'm surprised that the shareholders can have a deeper understanding of that. Let's first see how Charlie answers that, then I'll give my feedback on this issue. This is a very good question.
When you buy Alibaba, you do get a sort of a derivative, but assuming there's a reasonable honor among civilized nations, that risk doesn't seem all that big to me.
His answer is very short and pretty accurate, and I like his word, that derivative. I never thought about this word to answer this question. Well, actually, what US investors buy Alibaba is not its shares directly, but it's a structure called VIE. VIE is a short form for variable interest entity. It's a special purpose vehicle for any Chinese companies that are restricted by foreign investors to be listed in foreign exchanges such as the US stock exchange. So in order for any Chinese companies like Alibaba, who is directly restricted from foreign capital and investment, the only legal way to do that is to do this VIE structure and use the Cayman entity instead of the China entity to be listed on the US stock exchange. That's the legal way to do it, and I'm the expert on that because I was in this field. My field is more of private equity, venture capital, and startup like Alibaba and IPO, so on and so forth. So for VIE questions, it's the most important question for a Chinese company to be listed from a legal perspective. And yes, you're right. Anyone who buys Alibaba as a US investor is not buying its shares, it's buying a derivative of that shares. But this risk is manageable. Like this risk sounds maybe big, but actually is like slim. Is like nearly zero, or I would say zero, because that's the only way to do that. And it's zero. It's due to the China foreign investment restrictions and laws. I would say the risk, in fact, is nearly zero. I agree with Munger.
Got a lot of questions just about the investing in China risks, and I'll ask this one from Ravi Mehta. He's interested in your take on China and Chinese stock exposure for the long term. He says it's becoming quite evident that Chinese companies could be banned from doing business in the Western world, or maybe some of the Eastern countries too, because of the number of the following reasons. 1, the security threat issues. 2, the potential conflict over Taiwan. 3, inability to meet Western accounting standards.
I feel like this question is a little bit irrelevant. Like the security issue, why it's necessarily related to that, and the Taiwan issue is not that relevant either. But this is relevant. The accounting issue would be relevant.
And number 4, human rights issues.
Human rights issue is not that relevant either to this point here.
Considering all of the risks mentioned above, why would anyone as smart as Munger or Buffett consider investing in China or any of the Chinese companies?
Well, we did it for a very simple reason. We got more strength per dollar invested.
See, exactly what I understand. How he answered, and his answer is nothing related to the previous, what I mentioned. Security issue, the Taiwan issue, and human rights issue. That's not how investors think. That's not how the mind and numbers and the math should work. So I mean, like as an investor, just focus on your job and focus on the numbers, like focus on the returns.
In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China.
Exactly. This is the most important thing. If you're asking about investment, you just evaluate from like what he mentioned, this perspective, but do not like think a lot of irrelevant things. Like it will distract your thinking and make it more not accurate. It's like if you aim at the target and you want to shoot it like accurately, you have to aim at the most important question. A few things they mentioned, they just deviate too much from the big picture. You have to grab the big picture. Exactly here, what he says is most important, what the price you are getting there. How competitive this company is in that local environment. So if the company can win in that business world locally, second, you can get a price cheaper enough. That's the standard or basics of an investment.
This one came in from Wasim. He said, although the financials seem strong, do the political pressures from the Chinese government worry you at all?
Well, the Chinese government is worrying all the capitalists in the world way more than it used to. And of course, we don't like that. And we wish that China and the United States got along better. And if you stop to think about it, think how massively stupid both China and the United States have been to allow the existing tensions to arise.
I totally agree. But sadly, a lot of people who are triggering this fight instead of being friends with each other. But it also related to what we were talking about, the big cycles and big debt cycle, the changing world order, where the populism arises. People's ideas becomes more and more extreme, so that polarization comes into being. I feel like a lot of people are misguided and are not heading into the right direction. Here, Munger is actually not really answering the political thing, the political pressure. He is the kind of give a vague answer here. Do not directly respond to that, because I think that type of question is impossible to answer. How expect to have any accurate answer on that? I think his way of dealing is smart. Well, it's good. Just avoid the direct answering, but to present a bigger picture there.
What bad is ever going to happen to China or the United States if we two are close? If we make good friends out of the Chinese and vice versa, who in the hell is ever going to bother us? Of course we should make friends with China. And of course we should learn to get along with people who have a different system of government. We like our government because we're used to it and it has advantages of personal freedom. China could never have handled its life with a government like ours. They wouldn't be in the position they're in. They had to prevent 500 million or 600 million people from being born in China. They just measured the women's menstrual periods when they came to work and aborted those who weren't allowed to have children. You can't do that in the United States, and it really needed doing in China. And so they did what they had to do using their methods. And I don't think we should be criticizing China, which has terrible problems because they're not just like the United States. They do some things better than we do. They should like us and we should like them. So I think nothing is crazier than people who foment resentments on either side of that one.
I'm super amazed at how good his understanding is about China and how rational and wise his opinion is. First of all, it's very surprising to me that someone like his age and his experience, his totally foreign background, can have such an accurate understanding of the other country. Second, I totally agree with him on every government or every system runs in a different way. You can't change that. This world is full of diversity. It's like the whole nature is full of diversity. You can't force everyone into one form, right? It's like the U.S. government has its way to run. Let's say Japan government has this way to run Japan, and China government has the way to run China. So it's impossible to use one standard to require every place to be the same, and that's not the point. Third, he's good at drawing attention to the important point, disregarding the not important point. The important thing is be friends and cooperate and be strong together instead of destroying each other. What's the point and what's the benefits? Two big powers fight. What's the help to the world if the two powers be friends and cooperate? And what benefits can each of them get by cooperating instead of getting into war? It's very wise. There's no other way alternative to go. The best rational way is to cooperate and be friends and ignore the big changing order and that ego thing. Number one is always worrying about number two to take over. But what about take over? The more important question is how to continue thrive. Number one himself. I think it's stupid to focus on envy side and focus on controlling others instead of improving yourself and improving your enhancement of civilization. I think the focus is just wrong. I agree with him. Very wise and very good insights.
Another shareholder named Lee, L.I., wrote in and said, how do you think the Ukraine situation will be resolved in your opinion?
Well, I have no insight that's any better than anybody else on that one. Most of these things in the days when both parties have huge numbers of hydrogen bombs get resolved because the alternative is so awful that even an idiot can see that the question ought to be resolved. That's the way it's worked so far, and I hope it keeps working that way. We live in the Pax Nucleana. We've gotten an absence of world wars for a long time because we had these nuclear weapons. It's been a blessing to humanity, but it does make you nervous every once in a while, and it's quite irresponsible when the leaders in the modern age get over tensions over border incidents and so forth.
You said that we should partner up with China. Does it concern you to see Russia partnering up with China and that relationship getting a little cozier?
It's hard to think of anything that's more stupid, and both sides are doing it. The political leaders on each side are trying to make points with their own constituencies by showing how tough they are. That is massively stupid on both sides.
Another question came in on Alibaba, and I know that we've covered a lot of ground on this. I'll ask that because it's slightly different. This one comes from John Mooney in Marshfield, Massachusetts. And he says, Charlie, Alibaba is a top 3 holding for you. It sells at a steep discount to its U.S. peers. Best comparable is Amazon, which is triple Alibaba's PE. So what discount should U.S. investors seek when buying Chinese stocks, considering the political, regulatory, and especially the ownership structure risk? Oh, and considering the fortune Berkshire made on your BYD suggestion, why doesn't Buffett buy Alibaba?
Well, Warren, like many other intelligent people, likes to invest where he's personally comfortable. For some reason, I'm more comfortable with the Chinese than he is. That's a minor difference. And I have all kinds of places where I'm just like Warren. I have all kinds of things where I'm not comfortable, and I just don't go near them. I think an old guy is entitled to invest where he wants to invest.
This is also just a general description, general answer. Here he emphasized on why Warren and him would invest in a company at a certain price instead of focusing on comparing Alibaba with Amazon. I would say it's not quite directly answering that question in detail, but just a general description from their status and perspective, so from their position.
What makes you uncomfortable? What do you not?
It's okay to have some things that you just don't want to bother with. I don't think Alibaba is as entrenched as something like Apple and Alphabet.
Wow, this is answering the question. So previously, he is not really answering question. He is just like describing their own position. But this one is answering the question, which is Alibaba is not as entrenched as Apple and Alphabet. I totally agree. Alibaba is retail business is still like very competitive, and I don't know if you have tried out Temu yet. So Temu is the overseas version of Pinduoduo, which is another online retail competitor that Alibaba is facing and is rising super quick. There's a new player in the market. It's very interesting, and maybe you could like know more about Jingdong, JD. There are multiple players in this field, and Alibaba is facing fierce competition.
I think the internet is going to be a very competitive place, even if you're a big internet retailer.
Charlie, crypto was another question that I got a lot of. I'll ask this one from Carl Moscatello, who says, crypto is a $2 trillion asset class. Are you willing to admit you missed something?
Well, I certainly didn't invest in crypto. I'm proud of the fact I've avoided it. It's like, some venereal disease or something. I just regard it as beneath contempt. Some people think it's modernity, and they welcome a currency that's so useful in extortions and kidnappings and so on and so on, tax evasion. And of course, the envy, everybody has to create his own new currency. And I think that's crazy too. So I wish it had been banned immediately. And I admire the Chinese for banning it. I think they were right, and we've been wrong to allow it.
So Charlie Munger is very against the crypto. It's not surprising to me too. I mean, like, it's such a new thing. Like, who really knows what's going on and who really understand what's like all the fundamentals of crypto? It's very few, like very few people. So Charlie Munger is personally very against crypto. I think Warren Buffett also. However, my personal opinion is quite different from him on this. Like a majority of the things I follow him, like not follow him, but I totally agree with him. But on crypto, I'm kind of like diverging from him. Of course, there's a lot of like fraud and a lot of stupid things going on in that arena, and a lot of like people cheating in that industry. But you can't deny that it's got potential. It's got potential, and even the stupid Bitcoin, even like Bitcoin itself is stupid because it cannot be used, like do not have intrinsic value, and it does not have practical use, but it's the best protection from the money printing and the quantitative easing. This is caused by the stupid doing by the government first. Like the government is getting so stupid and printing so much money that getting people screwed up. That's why people come up with the Bitcoin to fight against it. So ironically, Bitcoin becomes like to me, it's one of the best tool in the fight against the quantitative easing and inflation. Let me know if you want to know my thoughts and if you want me to talk more about crypto. So Munger is very against it, definitely. And also on blockchain, besides crypto, there is, based on Ethereum, there's a lot of things going on and real applications, which could possibly be a real innovation comes out there. It's very small now. It's like the flower is not blossomed yet, like far from before that, but you have to wait, when it matures, one day it will blossom. So I'm not totally agree with him on this point. But also taking into my young age and my understanding of the blockchain, I mean, maybe as old as Warren and Charlie, they're not really interested in tech, and they don't really dig into tech because it's not necessary. Not necessary for them to learn about tech, and tech is so hard to learn, So I mean, I understand, I totally understand and I respect him. I respect his opinion, but I don't agree on this point.
Perhaps this is the appropriate follow-up then. This comes from Micah Misek, who asks, Mr. Munger, you've been warning of the evils of cryptocurrency in the past. How do you feel about the Federal Reserve preparing to launch a central bank digital currency? Do you think that this will be beneficial or harmful to the strength and resilience of our markets?
No, the Federal Reserve could have a currency if they want one. That would be we've got a digital currency already. It's called a bank account. The banks are all integrated with the Federal Reserve System. We already have a digital currency.
Very surprising to me, his opinion on this is exactly my opinion. I don't know if you get this point or not. What he means, or what I understand what he means, is the digital currency of a central bank is not a new thing, it's nothing practical. It exists for a long time already. The bank account itself is a digital thing already. A central bank invented some sort of his own digital currency is nothing and has no value because it's not blockchain. It's not decentralized. It's still centralized. So any centralized digital thing is already existing. It's the database. The database itself is the same intrinsic digital currency by central bank. But my mom cannot understand this. Like to my mom, she would think, central bank issuing its own digital currency is a big thing. It's embracing innovation and may create value, and itself is an innovation. But you think closely, it's not. You putting your cash, the physical cash, into your bank account, and this paper disappeared, and your bank account, the number, top it up. What changed? Nothing changed. One physical into your one database, logged into your own database. That's all. There's nothing created there, nothing new, no innovation there.
This is another question from Tom Seymour, who sent in several that were pretty good. This one, he says, 2 years ago at this meeting, you said, I think there are lots of troubles coming. There's too much wretched excess. Since that meeting, we have seen something like 860 SPACs, IPOs like Rivian and Robinhood, and the GameStop phenomenon.
Wow, this is coming. I'm excited about this question. It's a good question. If you mentioned, they mentioned all of this, and you can check out my previous released video. I will link the link here that's talking about the big debt cycle about this and the craziness in the market in the past few years and all the SPACs and the speculations there. It indicates a lot of things, and there are a lot of insights in that video. So check out the link here if you're interested.
I can't imagine you've changed your mind. I wonder what your favorite story of wretched excess is from the last year.
Well, certainly the great short squeeze in GameStop was wretched excess. Certainly the Bitcoin thing is wretched excess. I would argue that venture capital is throwing too much money too fast in, and there's a considerable wretched excess in venture capital and other forms of private equity. We have a stock market which some people use like a gambling parlor.
I totally agree. In the past decade, I was working in this industry, as I said, in the VC, the PE, and basically the capital world. And this is very true in the past decade.
And the transactions of the people who love the gambling parlor aspect of the business and those who want to make long-term investments to take care of their old age and so forth. I mean, you muddle that in one market, and it goes out of control because the stock market becomes an ideal gambling parlor activity. I don't think that ought to have been allowed either. If I were the dictator of the world, I would have some kind of a tax on short-term gains that made the stock market very much less liquid and drove out this marriage of gambling parlor and legitimate capital development of the country. It's not a good marriage, and I think we need a divorce.
I think he will be a good dictator of the world. I feel rested and not scared letting him be the dictator of the world.
How would a divorce work?
Well, you'd have to have some kind of a rule that just made stocks way less liquid. We have all the real estate we want, all the shopping centers and auto agencies and so forth, without having a perfect liquid market. We would have a stock market that was way less liquid. When I was young, we had a stock market that was way less liquid, way fewer shares. When I was at the Harvard Law School, we seldom traded 1 million shares in a day. Now we trade billions. We don't need a stock market that liquid. What we're getting is wretched excess and danger for the country. And everybody loves it because it's like a bunch of people get drunk at a party. They're having so much fun getting drunk that they don't think about the consequences.
I think he's heading into the right direction. His merit in that point is solid. Like, he has a point there, and I agree with him, and I support him. He can make a reform or like be the governor of the president of the United States. Like, why the president of the United States cannot be a wise man like him, but some like stupid actor?
We don't need this wretched excess. It has bad consequences. You can argue that the wretched excesses of the 20s gave us the Great Depression, and the Great Depression gave us Hitler.
Well, this scares me a lot, especially like recent years. I was thinking about this possibility. What he says here, the Great Depression leads to Hitler, and Hitler leads to the World War. To me, what I see is this depression is inevitable. Maybe I shouldn't use the word depression, but this big recession is inevitable, and I'm very worried. I hope people work together, not fight together, and I hope US and China can be strong together, not fight each other. That's not good for everyone.